Hello, I Anand Jain from Hanumangarh, Rajasthan welcomes you to your favorite Shridevi Classes YouTube channel where we inculcate interest and confidence in science, engineering and management subjects. Today in our project management subject, in our subject financial estimation and projection, we'll study estimation of production cost and will understand both direct cost component and indirect cost component in detail. We'll also study production cost as fixed cost, variable cost. We'll also learn various methods for estimation of production cost and will describe various strategies for cost reduction to achieve financial viability of project, and in the end pricing consideration in terms of production cost is also discussed. So let's start estimation of production cost. Question is, what is estimates of production cost? So estimates of product cost refers to sum total of all the expected expenses in terms of direct cost and indirect cost that a project is likely to incur to produce its goods and services in a given time period. Now, accurate estimates of production cost is very crucial for determination of sales price of product or services, to find out gross margin and profitability of project activity, or to evaluate financial viability of project. So to make informed financial decision about resource allocation and pricing strategies, estimation of product cost is very essential. Production cost for any goods or services include various elements. They may be direct cost components or indirect cost component. The direct cost component are those expenses that directly related to or attributed to production process or go into producing goods or providing services. They include direct labor, the wages and benefit of worker who are involved in production process is direct labor cost. Another direct cost component is direct material cost. The cost of materials and other components that are required to manufacture the product are direct material cost. We also need some additional manufacturing supplies, equipment, machinery, tools for the support of production activity, and those cost is also direct cost component and termed as manufacturing supply. So direct cost has three component: direct labor, direct material and allied manufacturing supplies, cost of machinery, tool and equipments. Indirect cost of product, on the other hand, include overhead costs that are not directly tied to the production process but are necessary for overall operation of project. They are those general business expenses which are required to keep production operation in continuation, and they include technology costs, manufacturing overheads, rent, depreciation, interest, taxes and cost of different utilities, and insurance and transportation charges. Modern production processes need a sound technology infrastructure and software support system in their activities, and expenses which are related to acquire and maintain such technology infrastructure and software system is known as technology cost in production. Similarly, we have some indirect material and labor cost. Apart from their salary, wages of labor or purchase price of material, we have to make other indirect expenses. So they are treated in terms of manufacturing overheads. A production use several utilities: water, electricity, heating, ventilation, air conditioning, and all those utility charges are treated in manufacturing overhead. We have to maintain our production machinery. There is depreciation of fixed asset, and we need additional cost allowances for unexpected, emergency, accidental conditions known as contingency. So they are all our manufacturing overheads. We have to pay rent on certain production facilities. We have to invest certain amount on capital expenditure, or we need money as working capital, and we have to pay interest on that amount which is invested in production activity. Similarly, we have depreciation of our fixed asset. So we need some depreciation fund to maintain our activities. Apart from that, production activity also involve various type of taxes of local and state government. All those cost component are indirect production cost. Similarly, we have to pay insurance premium for several production activities, and we have to meet out expenses which are related to shipping and logistic, that include transportation of raw material and finished goods. So they are also indirect cost component in our production. In simple words, we can say cost of production is original sum total cost of product without adding profits for wholesalers, shopkeepers, or other intermediators. This numerical example will explain estimate of production cost. We have to estimate production cost per unit of product for a plant which is producing 1 lakh pieces per year. Now the fixed capital investment in this plant is rupees 150 lakhs, and this plant which produce 1 lakh pieces use raw material that cost 96 lakhs rupees per year. Now to produce 1 lakh pieces in year, we need total labor cost 18 lakhs per year for all utilities, electricity, water, communication and others. We need 14 lakh 40,000 rupees per year. Now to maintain our plant and machinery for optimum operation, for maintenance purpose, it cost 6% per year of fixed cost invested, and for fixed cost of 150 lakhs, 6% amount, that is rupee 9 lakh per year is our maintenance cost. Similarly, for manufacturing purpose, we have to provide different supplies, tools, machinery and other things, and it cost 2% per year of fixed capital, and it is 2% of 150 lakhs, that is rupees 3 lakh per year. Now this plant having fixed capital investment of 150 lakhs have certain indirect cost on production in terms of interest and depreciation, and let's take that as 8% per year of fixed capital cost, and it comes as rupees 12 lakhs per year. Now we have to pay several type of taxes, insurance premiums, and it is 3% per year for fixed capital, and it is rupee 4 lakh 50,000 per year. Now the total manufacturing cost have direct cost component of raw material cost, labor cost and supplies cost, and indirect cost consist of utilities, maintenance, interest and depreciation, taxes and insurance. And if we add all those raw material, labor, supplies, utilities, maintenance, interest and depreciation, taxes and insurance premium, then it comes as 156 lakhs 90,000 rupees for the year to produce 1 lakh pieces. And if we divide this total manufacturing cost by number of pieces produced 1 lakh, we will get cost per unit of production as rupee 156 and paisa 90 only. It is also very important, especially to find out marginal cost, to distinguish between fixed cost and variable cost in production. Now these fixed costs are incurred regardless of production volume. Even when we produce zero output, we have to incur that fixed amount of cost in terms of rent of establishment, interest and depreciation of the capital involved in plant and equipment arrangement, and salaries of top management. They are all component of fixed cost and they remain there irrespective of amount of production. Now variable cost on the other hand fluctuate with the level of production as shown by this red line. This include cost of raw material, direct labor and utility expenses, and as production volume increases, this variable cost component also increases and it decreases if production volume decreases. Now the sum total of fixed and variable cost is total cost, and it is shown by this green line. There exist various methods for estimation of production cost, and reliable and accurate estimation of production cost can be done using these methods, which may be historic data analysis, comparison with industrial benchmarks, or inputs from supplier and contractors. Analyzing past production cost for an existing system as per its performance can identify the pattern, trend and cost driver for production activities, and this will help in not only estimation of production cost can also give an idea to reduce production cost. In industrial benchmarking, we compare production cost of our industry to industry standard and benchmarks to assess the competitiveness of our production activity, and it can also identify area of improvement where we can reduce production cost. Another way of estimating production cost is input from supplier and contractor. When we collaborate and get information from supplier and contractor, we can get accurate cost estimate for material, labor and other services which are involved in production process. For the study of financial viability of any project, the calculation of gross margin is very important, and for calculating project gross margin, we have to subtract estimated production cost from projected sales revenue, and the difference of two, sales revenue and production cost, becomes our gross margin. This gross margin is the amount of revenue that is available to cover operating expenses and to generate profits and dividend to shareholders. A favorable gross margin, higher amount of gross margin, indicate a higher potential for profitability of the project, while a low gross margin may impact project overall financial viability, and it will require a reassessment of production cost. If in an estimation, estimated production cost is too low, it will indicate that this higher gross margin is a false projection, as project is not adequately accounting all its expenses, and this would definitely lead to financial difficulties in later on when project execution and production activities are going on. For favorable gross margin or financial success of any project, we need cost reduction, and there are some strategies for cost reduction. For any business who is seeking to improve profitability, reducing production cost is a common objective. Now, some typical strategies for cost reduction include process optimization. If we identify and implement more efficient production processes, improve productivity and reduce wastage, then it will definitely reduce cost and increase our profitability and gross margin for the same amount of sales efforts. Now, another good strategy for cost reduction is supply chain management. We need material and manpower for our production activity, and if we negotiate favorable terms with the supplier or explore bulk purchasing options that reduce several overheads and optimize our inventory management, then this supply chain management will definitely reduce cost of production and increase our profits. One good cost reduction technique adopted by several projects is outsourcing. We can assess the feasibility of outsourcing certain production activities to economic lower cost regions or some specialized contractor, and they will produce quality subcomponent at lowered cost, and this will reduce our cost of production. Nowadays, investment on technology is also result in cost reduction. We can explore automation and better technology solution to streamline our production operations. This will reduce labor cost and enhance efficiency and quality of product, and that will not only reduce production cost, also can support sales promotion. The most straightforward strategy for cost reduction is waste reduction. If we implement better waste management practices and recycle initiative, then we can minimize material waste and associate cost, and this is most common strategies adopted by all good organization. What is importance of production cost in pricing consideration for any project? That must be understood to us. Accurate estimation of production cost is used to set an appropriate sales price for finished item. If we add fixed cost component and variable cost component, we can get total cost component as shown by this green line. If sales price per piece is fixed, then as volume of sales increases, the sales revenue will also increase, and at some point of sales amount, the total sales revenue shown by magenta line and total production cost shown by green line equate each other, and this quantity of sales or production is known as break-even point. So cost of production per unit serve as a baseline for determining the break-even point to cover all our production cost. And if we produce more number than break-even and also sales them, then we will definitely earn profits. For better revenue and financial success, all businesses should optimize their production cost in relation to market demands that exist in target market. It should also consider the competition available, the needs and preferences of target customer segment, and the pricing strategies of the company. If the cost of production exceed the sale price of a product, then business may need to identify areas to reduce production cost or to reassess pricing structure and marketing strategies to sell the product at higher cost. If all these options are not feasible, then business may need to consider suspending operation of such loss-making production and making strategic decision regarding the future of such business projects. Continuous monitoring and regular adjustment in production cost estimation is also very important. In our project execution during production process, production cost estimate should be regularly monitored and they should be adjusted based on the actual performance of production activity and market conditions. Now, by comparing actual production cost to estimated cost, business can identify what differences or discrepancies are there in cost estimation, and we can analyze underlying causes of that discrepancies and can make necessary adjustments to improve accuracy in future estimation and can make strategic decisions in terms of cost reduction or sales strategies to manage financial viability of the project. In conclusion, we can say estimating production cost is a complex but critical process for financial projection and estimation. Accurate estimation of production cost is used to make required informed decision about sales price, profits and cash flow. By considering direct and indirect cost and use of reliable historic data and better estimation technique, we can ensure accuracies of these cost estimation. And if we implement effective cost reduction strategies and continuously monitor and adjust estimate of production cost, any business can enhance profitability and improve its competitiveness to achieve financial success. We hope this informative learning video has explained each and every part of production cost estimation. Now you could understand what is direct cost and indirect cost of production, and you could also define fixed and variable component of production cost. We have also studied different cost estimation methods and important strategies for reduction of production cost and the importance of production cost in pricing strategies. Our other learning video of the same playlist are equally useful to enhance your subject understanding. And if you need dedicated study notes, do join YouTube membership of Shridevi classes. Happy learning. Have nice time. Thank you very much.